Hello, everyone. Thank you for tuning in. Hope you had a good week, and hope you have a nice weekend. Man, what a crazy market! It really is. It's like things are bad. We got these huge inflation readings. Uh, Interest rates are moving higher. Commodity prices are moving higher. The GDP slowed down, and yet inflation is still there. That's what we call stagflation. Inflation is not a bad thing in and of itself. The government tries to have 2% inflation. That's the target rate. You probably heard people talking about that because in an economy that's growing, you're just going to have inflation. You have a growing economy is an inflationary thing. All right. Things are well or things are good. What do people do? They borrow money to start new businesses. They borrow money to do improvements on their houses. So this is why the house your grandmother bought 50 years ago for 20 grand is now worth like $300,000 because inflation is not a bad thing in and of itself. But when it exceeds expectations or when it's really high, it's a bad thing. Now, when people talk about stagflation, this is like real bad. All right. Stagflation is you have inflation, which should happen in a growing economy, but the economy is actually decreasing or going slower. So you have inflation and a weakening economy. So that's the definition of stagflation. But I'll tell you this, and I tell my students this like every day. I've been doing this for long enough that I know that if you want to be a trader, like short term or swing trader, all right, you got to just be reactionary. Having an opinion is a very dangerous thing for a trader. In other words, you come in one day and you say, okay, the market's going up, the market's going up. You tell all your friends or all your trading buddies, oh, the market's going up, the market's going up. That's going to make you subject to like a confirmation bias. It's going to make you like ignore things that you probably should be paying attention to. And it can even be like in your subconscious. You might not even realize it. So one of the things I talk to our students about a lot is this whole psychology thing. Successful trading is about psychology. People think that they could come up with this super secret trading method that's always going to be perfect. It doesn't work that way. Yeah, I mean, check out my bio. I have literally traded for some of the best investors and traders, like literally in history. And I know I can tell you firsthand that that's not how it is. All right, anyway, before we get into it, I just think this is a pretty interesting idea for a trade on wheat. Now, you might be thinking like, oh, Mark, I'm not a wheat trader. I don't trade futures. Well, you got this ETF, WEAT. Probably going to be an opportunity here on the short side, meaning buying puts. So let's just look at the wheat futures. What is that? ZS. Oh, that's soybeans. Let's look at soybeans. Not going on there. All right, so let's look at wheat, and then we're going to go through the markets or the stock markets. ZW, that's what it is. So this is the future. So that ETF tracks the ETF. When you see a big move like this, we get overbought. This means it's so far above its typical or its usual trading range, or the buyers are so aggressive they just jack this thing up. A lot of traders are going to come into this as sellers because they're going to be expecting a reversion. A very common strategy on the street is reversion to the mean. All right. I mean, think about it. It's called the average for a reason. If something gets really overbought or really oversold, it's a good chance that eventually it's going to become back to average. So we're at a resistance level, which is a large group of sellers, and we're overbought. So that may draw sellers into the market. So I think that this is something I got on my radar screen. I wouldn't do anything yet. I would wait for the reversal to start if I wanted to buy puts over here on the WEAT, which is the ETF. All right, anyway, just want to look real quick here. S&P 500. Kind of a, nice strong move today. Broke its uptrend. Broke its downtrend. Okay, that's good. I am still bearish on the markets, everyone. I mean, I really am. With interest rates flying, let's take a quick look at the 10-year. The 10-year yield. This is TNX index. It's our 10-year yield. And, it broke out high. I love to show this chart to my students because this shows you how important it is to understand psychology. All right. The treasury market is friggin' enormous. Okay. It's way bigger than the stock market. You have people all over the world trading treasuries, but yet somehow, some way, this thing peaked at 5% exactly. That's when traders are like, okay, time to buy, because they're buying bonds. Yields and bonds are inverse. 5% exactly. Wasn't 5.01, wasn't 4.98, 5%. Traders are like, oh, if it gets to 5%, I'm going to act. And that right there should show you how important the psychology is in a market. It's all markets are, psychology. Think about it. The last trade on, I guess I'll just bring up Microsoft because we're going to talk about that. The last trade on Microsoft was at 406.32. All right. Think about that. It's a trade. There's a buyer and a seller. Someone thinks it's going up. Someone thinks it's going down. They're complete opposite opinions. One of my students asked me this great question. I mean, it sounds like kind of self-evident. Maybe not. I don't know. It really struck me as being quite profound. He asked me, he's like, Mark, is there an actual value for every stock, like for every company? And the answer is not really. It's in the eye of the beholder. As a trader, someone might ask me, what is Microsoft worth? I'd be like, it's worth 406.40. That's what it's trading at. That's most anyone's going to pay you for it. A fundamental manager might say, my research says Microsoft should be worth 500. This market is undervalued, so I'm going to go buy it. Maybe a short seller says my research says Microsoft is worth 360. I'm going to go sell it. If you didn't have varying opinions, you wouldn't have a market. So it's all psychology. And if you look at a chart, it's a graphical illustration of investment psychology. All right. So anyway, so Microsoft kind of doing its thing there. I don't really see a trading idea here. I mean, at least for me, we're kind of range bound. Things are tradable when they're at support or resistance and they're overbought or oversold, because that sets them up for a reversal. But if something's like neutral and in the middle of a range, there's probably not much there to look at. Apple, this 169 level has been like a magnet for this thing, right? First of all, it was support back in September, and then in October, and then, in April, and now it's become resistance. How is it possible that a level that was support could become resistance? Well, the answer is because of buyer's remorse. There's people who bought back here who, once the price, they think they're the kings or whatever, the new Steve Cohen. And then once the price finally goes lower, a lot of them say, man, I made a mistake. I want to get out of my Apple position, but I don't want to lose any money. So if it gets back to my price level, I'm going to sell. So you get remorseful buyers placing sell orders at a level that was support, and it converts the level into resistance. One of the main things you need to understand about trading if you want to be successful is just this basic understanding. I mean, it seems simple, but I've known people that have literally made careers off of it. Knowing which price levels are important. All right. Let's look at NVIDIA. I mean, if you're a market maker, basically your whole life revolves around knowing which price levels are important, because that's where you're going to be making the markets. You're going to be selling at one level, buying at another. All right, so check this out. This is what we just talked about. So this level was support in NVIDIA around 840. It converted into resistance for 4 or 5 days. Now NVIDIA broke the resistance. And where did it run into resistance again? At a level that was the prior top. So I told my students, if I was short-term trading, I'm not talking about like long-term. I don't know where NVIDIA is going to be in a year. No one does. But short-term, if you're a trader, look at this. This stock opened here on this day at 883.40. Today's high was 883.30. I mean, think about that. 9 cents on an $800 stock. How precise that is. Just like buyer's remorse can turn support into resistance, buyer's remorse can keep resistance levels intact, because there are people who bought up here and then the stock collapses. And they're like, if this thing ever gets back to my price, I'm going to get out at break even. So you get remorseful buyers from this peak placing sell orders over here at this peak. So I am not surprised. I mean, this literally got exactly to where our trading target was. I mean, I'm not saying I made money on it because I'm not really trading these days. But I know a lot of my students are. And the reason why I'm not trading these days is just because frankly, it's a lot easier to teach. It's not as stressful. But I will tell you this: I do maybe once a month, twice a month, I'll see something that looks really compelling, and I will maybe get it, and I will get it. But I always tell my students if I do, never, because I would never recommend a trade that I want to get into myself. All right, everyone. I hope that helps a little bit, and I guess I'll see you back here on Monday. Thanks, everyone. Have a great